So today I'm going to kind of talk about and kind of clear the air on some things. I'm going to do this in a way that's more directed towards business specifically versus independent wealth and that type of stuff versus where this kind of started. A lot of folks that got started in crypto back in like 2010 when you could spend $10 or $20 and be a billionaire today, which has happened many, many times over, and it continues to happen. But with that, there's been a lot of people that try to do the same thing and listen to a cousin or a buddy and end up losing everything. And now they have a bad taste in their mouth, and now they won't even use it for their business because they're afraid and there's fear. So we're going to talk about that in a way today that hopefully I can eliminate some of that fear and to kind of prompt you as a business owner to kind of think about the next steps for your business, because if you're not, somebody else already is. And so with that, the first thing I'm going to kind of do is kind of give a little background of kind of how I got here, because 10 years ago, if you would have asked me, would I be standing here today, the answer would have been absolutely not. And I don't speak in front of crowds, which generally when I talk about crypto is usually 4 or 5 people. So today's a little bit different of speaking to lots of people with different backgrounds and different things versus when I generally meet with somebody, it's for something usually very specific, and most of the time it's somebody who's gotten scammed or is trying to figure out, navigate where to get started. So ultimately, the basis of how I got here was kind of attributed to kind of Josh as my why of what am I doing? And about 2016, 2017, I kind of got to a point where showing up to a job really wasn't cutting it for me. I was in the data communications industry. I was doing fiber optics. Like I was doing the tech stuff, but it wasn't fulfilling, and I kind of realized I was kind of working my way to the top in a way that it wasn't working for me. I got sick and tired of just showing up for somebody else's goals and dreams at a job, which didn't make sense for me in the long run because I knew that I had a purpose was to help people here. Doing the stuff that I did technology-wise, I was helping businesses in a different capacity, but my job in the long run was much bigger than that because I have children and I wanted to kind of pave the way for them technology-based. So I kind of got to a point where the timeline in my life was a little bit different for most because I kind of just stopped caring about the regular way things were done and realized that there's got to be a different way. I kind of got lucky in a way where some of you may or may not know Phil Sigler here in Boise. I got lucky. He kind of built a facility called the Boise Tech Mall, which is kind of like a starting point for technology in the Boise area. I met with him in a brief meeting because I was just looking for some office space to kind of branch out on my own instead of just being a worker bee for somebody and to start somewhere with something. So I kind of started a little lighting technology company where I was doing LEDs and stuff like this before people were kind of doing this at the time. So I just needed a place to get started and figure out my why. In chance with meeting Phil, it kind of turned out that I didn't realize that he was a major crypto guy way before most people. Like he was a founding forefather. He'd been mining cryptocurrency in that facility. And there was an opportunity to sit down for an hour with a group of guys that it was mandatory. If you're going to sit down in the meeting, you got to buy 1 Bitcoin from Phil because he was mining them, and that's how he sold them, right? So you had to be able to create your own little economy. So I was lucky enough as a tenant to sit in and listen. And within 30 minutes, like light bulbs went off, and I kind of walked away from this meeting. I kind of felt like an idiot because this has already been around since 2010. Here it is, 2017, and I'm just starting to like learn about crypto and blockchain, and I've already been in technology. Like it's just kind of like I missed the boat on something. So from that moment, I kind of made it my goal and focus to provide knowledge in this space when there really wasn't any at that time. 2017 was the first time that a lot of people started to hear about crypto because it was on the news. It was the first big boom, and we're going to talk about that in a timeline that I put together. But that moment is when I realized there's all these people that have money to put into the market. I didn't really have any money to put in the market at the time. I was starting new stuff. I was kind of changing how I wanted to live my life at that point. And I figured at this point in time, well, instead of putting money into the market, why don't I just start figuring out how to earn more coins? Right? Like why we're all showing up to earn money. I would rather have coins because of the rate that these things are going up. It makes more sense to hold on to $100 worth of Bitcoin than a $100 bill that's going to be a $100 bill in 100 years. Like that doesn't change, right? So at the end of this whole conversation, for me, that moment, I made it a focus to continue every single day. In fact, I kind of got I kind of got addicted to trading for a little while because that was the easiest way to make coins, to just sit 24/7 on a market and just start trading. So from that moment, I had to back off and go realize I'm not really helping anybody if I'm just focusing on only trading. So I kind of figured out ways to just meet with folks and really start with the basics. How do you set up a wallet? Where do you get started? Because there's a lot of folks that have done crypto that have started in the completely wrong places and have either lost or made bad decisions, whatever the case may be. So fundamentals was really the key. How do I get set up with a wallet? How do I make sure it's secure so I don't actually lose these coins? So these fundamentals is how I ended up here today with meeting with a lot of folks of just the little onesie-twosie stuff. There's a lot of folks that I've met with that have been scammed and trying to figure out how do you try to recover funds and things like this. But unfortunately, there's not a lot you can do after the fact. Some cases you can. So the biggest thing is, no matter what, is setting yourself up in the beginning and knowing the right tools and how to get started, which can create some fear because you don't want to do it wrong. So I'm here to help with that, even after the fact. I don't know if I got a clicker to be able to click to, oh, here we go. So I'm going to kind of start off step one. We're going to talk about some of the banks and what's out there. But before I do, I know some of you guys, most people in here, have heard about crypto before. Good, bad, ugly, or whatever. How many of you guys, raise your hands, how many of you guys hold crypto right now? How many of you guys have it? So a good amount of you, probably about half, okay, which is more surprising than I thought. How many of you guys that hold crypto, how many of you guys have actually integrated and have any functionality in your business currently as a business owner? We have 2. Great. So that's a start. It's better than 0. So hopefully by the end of today, we can raise that number up just a little and slowly start to grow. And even from this point on after today, creating some sort of a network that really doesn't exist here of crypto holders that are business owners that can continue to build a network together, because there are a lot of us here that accept crypto as businesses here in this valley that most people don't even know existed. There's car dealerships, there's other types of businesses that there's no network yet. We're still so very new. To the point where now that things are becoming a little more mainstream, the banks are becoming interested in this stuff, okay? So JPMorgan, Bank of America, these guys are not only testing stuff, they're using it already. Wells Fargo's looking at different things. Swift is in the talks to be able to be kind of taken over by crypto payments. So we have some major people that are looking at this stuff. BlackRock's buying up as many Bitcoins and cryptos as they can get, because they want to be first to be able to offer it to the consumer. But on the flip side of it, there's always been the decentralized side where you can hold your own stuff, and now we want to be able to transfer stuff into a banking side of things for consumers that don't want to have to worry about, am I losing my passwords or my seed words? We just treat it just like we would normally with money. And this has been done even in the past. ICCU, one of our sponsors here, a couple of years back, actually had the ability to hold crypto in your account. That went away for a little while because we needed some regulation. But even still, the ability to just have easy function of crypto is a needed thing for the future, especially as a business owner, accounting purposes, and things like this. So we do need an element of centralized cryptocurrency that's regulated in order for this industry to really scale and grow. So we're going to talk about that in a little more depth today. So obviously, you've heard of all these names, and a new one, too. So Bank of America, I don't know if you guys have realized, literally just went away for quite a few years here in Boise, and within the last, I think it was the last 30 to 60 days, we have like 5 or 6 new Bank of Americas everywhere, right? For a reason, right? They're bringing the new system into the consumers, right? So it's already happening, just not a lot of people are talking about it, and we're starting here today. So with that being said, let's talk about the timeline, because I speak with people on a regular basis, have no clue that this has even been around since, well, the white paper was released in 2008, which was the plan of what crypto is, or Bitcoin is going to be. And when I say crypto, that's all cryptos involved. But mostly today what we're going to talk about is Bitcoin specific, because it was the first, and it has been around the longest and has the most information. I'm not necessarily a Bitcoin maximist. I'm a futurist, so all things technology-based, I'm here for it. So starting back in 2008, the white paper was released, and any cryptocurrency should have a white paper. That tells you what the plan is, that's what the goal is, that's what's going to happen. If it doesn't have one, probably don't buy it. Most meme coins don't have white papers, don't buy them, right? I mean, just simple stuff that just, where are we going, what are we doing? I consider a white paper, that's a business plan for a crypto, for a coin, right? And if you're a business and you decide to create your own coin, you need a white paper so that way you have a plan so everybody knows what's happening. So the white paper, October 31st, 2008. It's a significant day because it's Halloween and, put some fear on the crypto. Let's start on Halloween, right? So might as well. So it is not scary, but I don't know why they chose that. The original founder is Satoshi Nakamoto. Many of you guys have heard this name. Nobody knows who he is. A lot of people think they know who he is. There's people that have claimed to be him, which is really kind of weird to me, but nobody knows. But one thing that we can say for sure is he's the one who wrote the white paper, and supposedly he still holds 1 million Bitcoin in his wallet, right? So that's a whole different conversation, but that is an attribute to the starting point of this market. Now, from this standpoint, the beginning launch of crypto, let's keep in mind, this is a finite cryptocurrency of Bitcoin. There's only 21 million Bitcoin that's ever going to be had, right? So for the founder to be holding 1 million Bitcoin in his wallet, right, says something, and those coins still have not moved to this day. They're still in his wallet. They haven't moved, and we're starting to see some movement on a lot of these old wallets that have been around for a lot of years. They're starting to come awake, right? Because a lot of these folks that were building way back in the beginning knew that it was going to take 10, 15 years for this to become mainstream. Like a lot of technologies do. You have your early adopters, and then you have your institutional money, and then you have mass adoption. We're right at institutional money right now. Still, to this day, there's still a lot of room left because the average consumer doesn't have it, doesn't have access to it, and doesn't know about it. So with that being said, we go back just a little bit farther longer. The Genesis block, the very first mining block that was ever mined was in 2009. And I'd imagine there's about a year gap because you needed to be able to create some programs and stuff to be able to run these algorithms on your regular computer at home. You could mine Bitcoin on just a regular gaming computer back in 2009. From that standpoint, things started changing a little bit right around 2010, 2011 when the very first transaction happened. And I think it was like a Reddit post where some guys were trying to create some sort of validity to the coin. And like, okay, I'll go ahead and send you 10,000 Bitcoin. You send me 2 pizzas. And that was the first transaction with Bitcoin, which set the price, which pretty crazy, at about 100 Bitcoin for a penny, which is and the very beginning rate right around there. It's tough to say speculatory is exactly what it was, but that's really close to the value. So we're talking 10,000 Bitcoin for 2 pizzas, basically. That was the beginning transaction. Now imagine the math today at Bitcoin, $110,000 a coin, and you're sitting on 10,000 Bitcoin. Like, that's a ridiculous amount of return. In fact, I'm going to tell you here in a couple more slides down at the end, you'll see at the ROI where we are today, we're up 228 million% since the very beginning. There's not a single thing in the history of mankind that has gotten close to that. And we have a long ways to go. We're not even close to the end road of this. So moving forward, we started in 2011, the first time we had a parity at $1. And that was a major movement, right? So we started from basically no value, and we started slowly building value. So from that point of the original Genesis block, in the algorithm, it says that every 4 years approximately, it's a certain amount of blocks, but about every 4 years, that mining algorithm that you're mining these cryptos with on your computer is going to get twice as hard to unlock, so you're going to need more computing power, and you're going to get half as many of them every single time, every 4 years. So now we have a system in place for this type of currency that the more time goes on, it's harder to get, and you're going to get less of them, right? Which is completely opposite of the United States dollar and most fiat currencies, where the more time goes on, the more they just keep printing more, to where a bottle of water is $5 now, right? When water actually was free at one point. So we're in a time where it's not that everything's gotten more expensive. Our dollar's buying power has completely lost, and we have something that works opposite of that. So moving forward, we can see that our halving went from 50 Bitcoin every 10 minutes unlocked to 25, right? So with that being said, that speeds this process up, right? So you can see from 2013 to 2014, we go from just some halving events to now we've got our first Bitcoin ATM machine in 2013, right? So now the average consumer can just go in and buy with cash in their drawer and start buying crypto without having to be like a middleman, peer-to-peer, because mostly up until this point, it was if you wanted to buy some Bitcoin, you had to buy it from somebody who was selling it. And that person that was selling it probably mined it, because how else are you going to get it before that? Like, that's the only way you could get them. So at that point in time, you started seeing ATMs started popping up to where you could retail and go buy them, usually for a pretty high fee, but you could. And so these started popping up all over the place. And then we started seeing exchanges, which are basically online websites that you could go on. You could send your crypto and you could exchange it for different coins if you wanted to, because more coins started coming out than just Bitcoin at that point. So we had the ability to move things back and forth a little bit, but then people started to realize websites are not secure, and Mt. Gox was a place that coins were stored, and they were hacked, which there's been many hacks in between. I didn't put them in here because there's been a lot of them, because our standard computer system that most banks work on is really hackable compared to the SHA-256 system that Bitcoin works on. You need tremendous amount of stuff to be able to try to hack a Bitcoin wallet. And to my knowledge, a Bitcoin wallet address has not been hacked. The only thing that's been hacked would be passwords, things of the user just didn't secure properly. But a wallet address right now with current technology isn't hackable, but that's coming soon because of quantum computing. So we will have to make changes to this network even farther down the road. So we still are in an evolving network that will make changes as we grow. So following that, we move into another halving here July 9th. And you'll notice that the timing on this is pretty close to about 4 years. I didn't bring a chart. You guys can do your research on it on your own. If you look at the price based upon these halvings, you're going to see major spikes in the industry. Every 4 years is when you'll see a spike because the value of the coins change because there's a lot less of them, and you get a lot less of them through the mining process, which naturally is going to bring the price of these coins up. So from the halving in July 9th, 2016, up until right around 2017, which is right around when I got involved in this market, right? We went from, I can remember Bitcoin was around $900 a coin, $950 to $1,000, and right around, it was right after Thanksgiving 2017, literally the day after Thanksgiving was the start of the very first bull run in crypto. And it was the most exciting thing because I had only been involved in this space for just a couple of months, and I didn't really have any money either. So I had like a couple $100 in this space, and a couple $100 turned into like the more money than I had to actually made without literally doing anything in a couple of months. Then everybody started asking questions, and then we kind of went back to a crypto winter. So a lot of people actually bought into crypto when it was up at $20,000. And then it pulled all the way back, and people panicked, and they sold, and oh, I lost, and I'm not going back. Well, timing is everything, and why would you buy high and sell low? Like, that's generally not good trading advice. So if that happens, if you buy high, just hold. Like, it's always going to keep going up because we have a deflationary mechanism built in that we're going to keep getting less of them over time. So the neat thing about this space is trust. Trust the system. It's built into the white paper. If you haven't read the white paper as a Bitcoin holder, it's a good read, right? There's some stuff in there you may or may not know. But in the end of it, you know, this mechanism, this system does keep growing and evolving, whether anybody wants it to or not. The people say. It's not about what the banks want. It's not even about what the businesses want. The people have determined and demanded this is the solution because the technology is better. And we're going to talk about a comparison here in a minute, the difference between dollars and crypto. And I have a little chart that we'll look at with that. So moving forward from that, we've got crypto winter, which scared a lot of people out of the market. People lost money, they left, and some of those people never come back yet, right? Some of these people are business owners that, I lost in 2018, I'm not coming back. Well, your competitors are. So it's a good idea to take your losses and move forward. I've lost 30 to 40 grand in this market myself by leaving coins on an exchange that went under myself. That was my fault. I knew better, right? But I went on vacation and forgot. So that happens. So moving forward, we all learn, but that doesn't mean we just don't play in the space anymore because we learned a hard lesson. Because, you know, education costs at some point. Some of us get it for free. Some of us pay $40,000, $30,000 for it. So learning what not to do is the next step. So I'm here to kind of guide you guys in this next step as I move into more slides, because the fear part of this industry really doesn't need to be there with some good fundamentals. So the last couple steps in here, I'll talk about the halvings. El Salvador made its legal tender. Things have changed a little bit since then, but it was the first country to actually come in and make it their tender because their currency was failing. They didn't have a better system, right? So if a currency is failing, this is a great solution for that. Just before that, though, February 21st, the market cap for all cryptos hit $1 trillion. Now, that sounds like a lot of money on one side, but compared to how much money is flowing throughout this world, close to 350 trillion, that's really nothing compared to all funds moving forward. So we have a long ways to go for this to be kind of a global competitive currency at that timeline. moving forward, it's now kind of, we're in a spot where most people realize this is not going away. In fact, a lot of people were told, oh, wait till it collapses. Well, it can't. There's not one person in charge of this. Everybody's in charge of Bitcoin, especially if you hold it, you mine it, and you use it. So unless you just get rid of all the people, crypto's not going anywhere. So moving forward into the next halving, and ETFs approvals, and you start to see a lot more things start to happen a lot quickly as we move into 2024, 2025. Our halving now is at a point now where we're only getting 3 1/8, just over 3 Bitcoin every 10 minutes. Like we're getting to a point where it will be fractions of a Bitcoin every 10 minutes now, to the point where it'll be so hard to mine. You'll need computers the size of these rooms in here to unlock these coins, to a point where we may get to a point where it's just so expensive to mine them that the pricing just stays, and we create some sort of algorithm where all you can do is move coins, because eventually all Bitcoin will be unlocked. At current technology, it won't happen in our lifetime, but with AI and faster algorithms for quantum computing, it very well could with farther technology, which I'm convinced that I think that'll happen in our lifetime. We'll see the last Bitcoin mine, and then after that, it's just nothing but transactions. So from that point, we now are at an all-time high. This last month, we hit about 124,000 on Bitcoin. Our ROI, like I mentioned earlier, is 228 million plus. That fluctuates just a little bit, but that is a ridiculous amount of return to where most people, if you're trying to make money or any kind of retirement, you should probably look at this. And maybe even your business should, because if you're struggling to maintain stronghold in your business, this is a great way to just add one more thing to your business, and now you have less competition because you have ability to take a payment that your competitors just don't. And I'll circle back to that in just a minute. So let's move on to another slide here. Why banks care about crypto? Well, it's because we told them they need to, because we're using it on a decentralized side. A lot of us are. We've been sending transactions to each other. We've been doing business back and forth. But we need a way for banks to stay relevant and to continue to make money, but also we need a way for the consumers to stay protected also too, because not a lot of people are going to want to still stay on the decentralized side and self-custody. We have a lot of folks that are just going to stay with their traditional banking system, and you'll go and log in your bank account, you'll see your checking, you'll see your savings, and you'll see your Bitcoin wallet. No different than if you're a Cash App user, you can do it on Cash App right now. That's been happening for quite some time. And banks are really starting to take a note of the fact that this is a new product that they really need to look at. So customer demand is number one. I mean, offering modern payment options to your customers is kind of a norm. I mean, credit cards, checks, these are all been a progressionary thing in our financial system as business owners, to where if you go to a grocery store right now and somebody whips out a checkbook, you're like, I'm picking a different line. Like, we don't have time for this, right? Like, most of these things are designed to speed things up for us, and there's a reason why we're talking crypto today, because there isn't anything that's faster or better, and it does replace current systems that are old. They don't work well, right? And technology is designed to simplify and speed things up, and that's why we're talking about this today. It's faster, it's cheaper, and you get paid instantly. There's no fees, and you get rid of chargebacks. And I'm going to dig that in a little bit farther too, but from a business standpoint, you're trying to get paid immediately. That's appealing, right? Pretty much zero fees. Why are there no fees? Because the consumer, when they send you the money, they pay the fee. How it should be, because they're the one that wants to buy it, right? Not the business owner, right? So that is kind of a neat switch from how we're traditionally doing business, to where the consumer is the one that pays the fee, but not only that, the fee to send a transaction is like 5 cents. Right? So we're talking super minimal, extremely fast. From a business standpoint, that means more money, generally. And the last piece of the puzzle, chargebacks. Like, I don't know who runs a retail business in here, if you've ran into chargeback issues. It's like a $20 to $25 billion problem every year. Consumers can come in, buy a computer from you, call the credit card company, say, hey, I didn't get the computer, or I don't like it, and they just give the money back to the consumer without asking any questions. And to me, I don't think that's fair. So chargebacks is another thing that's been eliminated. Chargebacks is a thing for shady business owners, but we're going to work that out in a different way, where if you're a shady business owner, you probably won't be around in the long run either, because crypto also gets rid of middlemen as well. And middlemen require trust. And with crypto, you don't need trust because there's no middleman. So that solves more problems. The next step for businesses, 24/7 liquidity. Okay, you can send transactions on a Sunday at midnight anywhere in the world 4 or 5 cents, and as much as you want. Like, you can send $1 million for 5 cents on a Sunday at midnight. You can't do that with a bank, right? So what does that do? That speeds things up. That makes your business more efficient, which should make it more profitable, right? So taking a look at that for banks, that's a needed thing, okay? Because banks close, at 5 bankers' hours, right? There are no bankers' hours in crypto. It's every day, all the time. Worldwide, too. Like, every money market in crypto is 24/7. Programmable compliance. Rules on chain reduce fraud and admin overhead. These things, you can put in things for your business that make sure that you streamline your business faster, okay? This is designed in the end to make your business more efficient every which way that it possibly can. Regulatory momentum. We're clearing rules and lower the adoption risk, right? There was a lot of fear back then. Now, if banks are offering it, you don't really have to change a lot from what you've already been doing. You now have more that you can bring in for your business. On top of that, you can also generate more cash flow for your business, included by even creating your own coins, right? And we'll talk about that a little bit. New revenue lines, which is new coins, expect more banking products tied to digital assets. Like, they want to make money, right? But at the end of the day, this is designed for the business owner to make more money, right? So we have better cross-border transactions, so we can settle way less transaction costs by just moving crypto back and forth. Like, we can move billions of dollars a day for fractions of pennies, right? So this makes it so much easier to do business from other countries, right? Like sending wires and all the things to other countries. Like, it's a nightmare trying to do stuff like this. And in fact, it's lowered businesses a lot from being able to move forward with what they have to offer because they're limited. So being with that, we have asset tokenization. Like, you can literally tokenize your entire business, rewards programs, all sorts of things. So we have a lot of ability to integrate into new technology for you with the openness of the blockchain system. Fintech competition, right? So you have other providers, Cash App and things like this, where banks are now going to compete because Cash App has been doing this for quite some time. And then also, prepping for CBDCs. I mean, we're going to have global central digital currencies, and you want to be ready for this stuff. This is going to be a global thing, and we're going to eliminate having all these different currencies for all these different countries. We're going to have more of a centralized situation where it makes it easier for everybody to do business more efficiently, right? So this is appealing for everybody. Okay, JPMorgan token is moving about $1 billion a day right now. We have a lot of examples, right? And these are all stuff that I just pulled from Google that anybody can look up as far as real world cases of what's happening, who's using what. Some of this stuff is kind of hush-hush as far as the actual details because they're still building right now. They're still putting stuff together. So we have more time, and the key is now is if they're doing it, you should be thinking about it at this point. Even other countries right now, I put together a map of different programs for central banking systems that have been launched, people that are looking at it as pilot, and then the rest of the country or the world is looking at it in developmental areas for how they can be able to move forward. Naturally, the United States is always usually going to be on top of stuff. We also hold more Bitcoin as a country than other countries as well, too, so we can stay on top and still be first. And if you're not developing, piloting, or launching, you're still looking at it, and there's very few people that are still looking at it right now. And these are generally like third world countries or smaller places that just, their currency is so controlled that they'll be the last to adopt, but if they want to play in the real world, they'll have no choice to. So the 3 big changes coming to your business is the disruption of traditional financial systems, your credit card systems, things like this. If you use a traditional credit card processor, I work really close in my other business with Freedom Payments here locally. They're one of the very few people that have actually done things a little different, where they actually allow you to make sure that the customer pays a transaction fee with their stuff. But still, at the end of the day, there's other options, right? The transformation to your business operation can mean a million different things. It can simplify from internal transactions, how you do different things. There's voting mechanisms you can do. You can tokenize assets in your business. Who here, real quick, has a rewards app on your phone for, say, maybe a gas station or maybe like Taco Bell or something like this? You can create your own reward system that's a token that utilizes a standard blockchain that's not exchangeable. So now say your Chevron rewards are now exchangeable for your Maverick rewards if you decide or you want to combine them. So these are things that can be done moving forward that makes things really easy to grow your business, and now our marketing tools on top of it, right? So as soon as you announce that you're taking crypto, now you have something to go market on top of that for your business as well. Also, the next step is alternative funding and investment models where, like I said, creating your own rewards tokens, but you can also, your company can create its own tokens and its own mechanism. And at that point in time, you kind of create your own economy at that point in time. Anybody can go create their own coins literally right now. Probably in about, I don't know, 15, 20 minutes, I think is about a reasonable time till you can create a set of coins. What you do with them after that and how you bring value and utility is kind of the business side of it, but anybody can do it at this point in time. So the advantage is to be able to scale your business just utilizing a token is there. The question is next is how and when. So this slide right here is kind of an important one, and I'll circle back. I want you guys, if you have a chance, you guys can scan this QR code here. This will actually pull this up on your phone, so you can take this as a takeaway. This is the comparison from credit cards to crypto, from settlements to how long it takes to settle a transaction, from the different fees, from chargebacks to the different fraud models, cross-border, the ability, and reversibility too. This is your homework for today, okay? Because this is the difference between what we're currently using and what's here available for you now, okay? So take this as a takeaway. Did everybody get a chance to scan this? Take that as a takeaway for you guys, and if anybody wants to sit down, I'll be here all day too to kind of talk about some of this stuff with your business. Today's a free day of just passing out knowledge, and I'm here to help anybody even at lunch too if these are some questions that you've been looking at. So with that being said, a quick little roadmap here, 5 basic action steps for you. Learn the basics and fundamentals. That's my job. I help a lot of people do that. Next, start accepting them. It's really super easy to accept payments at your business. Integrate into some sort of POS. Not a lot of them do that yet, but that's the next step. Ask the questions. If you're using a credit card provider, ask them, do you integrate into your POS? If not, who does? Right? Start asking the questions, and it'll prompt these other businesses to start getting on top of their business right now because they're probably falling behind as well. Step number 4, plan for taxes and regulations. Go talk to your accountant right now and ask him if he's doing crypto stuff, because if he's not, you might want a new accountant, right? Because this has been going on for a while, right? So everybody needs to adopt at this point in time. Future-proof with CBDCs. We're not quite there yet, but just know that, and it's coming, okay? 5 years from now, we won't be talking about if banks are using crypto. It will be the norm. The question is, did your business prepare or did it get caught off guard? You guys remember Nokia with the stick phone? Everyone had one of those back in the day. You want to know why we don't have them now? They had a great product. They just didn't evolve. They were so focused on what they were doing that everybody else decided to do better, right? Because if you're not first, you have to be doing it better, right? So this is the takeaway from everybody here. Start doing it, start asking questions. Banks are going crypto. The real question is, will your business be ready when money itself changes? But the thing, it already changed. It's already changed. So let's get ready now, okay? It starts here. Open a wallet. In the next 30 days, right? And in fact, maybe in the next 3 days, you could set this as a goal. Open a wallet. Ask your accountant. I recommend, if your accountant does not do crypto, find a new one. I have one for you if you don't have one. Test a payment processor, right? Find somebody who's doing different things. Maybe there's different apps that you can use to be able to, but find what works for your business. If you need help with that, that's what I'm here for. But start asking the questions. And last but not least, here's some contact information from me if you want to sit down and go over some things. But just ask the questions for your business. How and what? For anybody you're doing business, are you doing crypto? How are you thinking about it? Because if you're doing business with people that aren't, they may not be around. Thank you guys, and we'll chat soon.